Hello, everybody. Welcome to Wall Street from Main Street podcast channel. My name is Mo Dawood. I am here with Jason Burak, the co-founder of Wall Street from Main Street. Hey, Jason, how you doing?
Very good, Mo. Just got back from a CPAC last night, so that was a very interesting experience. It was my first visit to CPAC, and yeah, it was very enlightening. I learned a lot about the freedom movement, about Ron Paul, and what makes him different from other the normal Republican philosophy of politicking and governing this country.
Yes, I heard about the CPAC conference that was held in Washington, D.C. this past weekend. Um, I heard that Donald Trump came as well and surprised everybody. He could be running as a Republican candidate for the 2012 presidential election. Uh, he also said that Ron Paul was pretty much inelectable because, well, he would be a threat to everybody on Wall Street and the corporate world. Is that correct?
Yeah, I mean, Donald didn't say that in so many words. He just said that Ron Paul was unelectable. He didn't say why, but I mean, if you put two and two together, you can tell that Ron Paul, would stop giving the Wall Street banks, free money. There wouldn't be any bailouts because we'd be doing free market capitalism, and capitalism involves failure. And that's something that the business as usual crowd in Washington D.C. here, that both parties and a lot of the bureaucrats and lobbyists around here just don't want to hear. So Ron Paul definitely threatens the status quo. And there's a lot of people, Mo, that like the status quo, that don't think there's really anything wrong. I actually heard that Harry Reid a couple weeks ago thinks that there's a 40-year budget surplus for Social Security.
Huh. Yeah, they wish. Anyway.
Yeah, I mean, isn't Social Security now? Didn't the Congressional Budget Office come out and say that now the Social Security is going to be running a permanent budget deficit now for forever?
I did hear that. I heard they're going to be out of money by the year 2000, and I think it's year 2037, somewhere around there. But I think they were a little bit optimistic on their estimate. It could run out very soon once all the baby boomers lose their job and decide to cash out on their Social Security earlier than normal. So anyway, today's discussion is mostly going to be about the commodities, specifically the food prices, potash, and we'll also get to gold and silver at the end of this show. I don't know if anybody's been paying attention to what's going on in Europe, but there was a massive revolt there to overthrow the dictator Mubarak, and he resigned, I believe, last Friday. I guess people got fed up with his dictatorship. I mean, this country gets so much money in foreign aid, and yet he doesn't invest it into his country. Yet he put it in a Swiss account and doesn't share with anybody. Is that correct?
Yeah, I mean, that's definitely something that my research has pointed to. I mean, the U.S. is supposed to, promote democracy here and, free markets and capitalism. And yet, why are we supporting a dictator? Why are we bribing a dictator to stay in power, Mo? Why are we giving Egypt so much foreign aid? I mean, is it because of Israel? I don't know what the exact answer is. Is it because of the Suez Canal? So, they won't steal our oil that goes through there? I don't really know the exact answer, but Ron Paul was talking about in the speech. Why are we giving money if we're this in trouble, financially? Why are we giving money to foreign aid to any country?
That's a good question. I support Ron Paul's theory or his foreign policy, which is to stay out of it. And that's what we need to do. We need to stay out of everything that's going on outside our borders. If there's a revolt, just leave them alone and let them do their business.
Yeah, I mean, the libertarian philosophy here is to trade with everyone and make war with no one, and don't get involved in in putting up a puppet regime or anything like that. That shouldn't be important. We should just, want to trade with them. And maybe the U.S. thinks that supporting, this government will help with trade, but the results have shown the opposite.
I agree. Well, one of the major reasons people were revolting is higher food price. I I believe that 80% of the Egyptian income goes to food and water. Is that true?
Yeah, food, water, energy, the very, very basics, Mo. So, just to stay alive and, retain sustenance here, the Egyptians were spending a disproportionate amount, whereas, here in the U.S., I think the statistics is we spend less than 15% of our total yearly incomes on basically food and energy. Obviously, we spend a lot more, on housing and rent, but, we're definitely seeing the prices go up at the pump here. For gasoline, we're starting to see well over $3 a gallon gasoline here in the DC area, and I've heard it's worse elsewhere in the country. And we're starting to see some of the tough decisions at the restaurants and at the grocery stores, as the restaurants and grocery stores experience some of the really bad effects of inflation, where at first they just see margin compression, but it's only going to get worse, I think.
Oh, I agree. Don't be surprised if you see grocery stores closing down. And no more Safeway, no more Harris Teeter, no more Wegman, Costco closing down. Inflation is not good for the grocery stores since they got really, really small profit margins.
Yeah, I don't know if all the grocery stores are going to be allowed to close down, Mo. You might just see them get bailed out, or you might see the government try price controls, which I don't think are going to work either, because everywhere you've seen price controls, with rising inflation, you've seen humongous food shortages, which lead to riots, because, the shelves are just, there's nothing on the shelves, because the business people the people who run the grocery stores don't want to sell the stuff, at a loss. So this is not going to end well if this policy of inflation continues, of monetary inflation continues.
I agree. I think Gerald Celente said it best. When people lose everything and they got nothing to lose, they lose it. And food and energy is what people need every day. And if they don't have that, they will lose it, just like Egypt.
Oh yeah, and J.P. Morgan knew about Egypt over a year in advance. They saw this coming, Egypt and Tunisia. There was a Max Kaiser interview I saw this week from one of his guests, and the guest said for research on his book, it was for one of the former creators of derivatives who worked at J.P. Morgan, and I forgot the lady's name. And this lady, in her derivatives department, because now she's heavily into commodities, Mo, and other commodities derivatives, and she's long commodities, like I said. But in a report that this guy had gotten in his book, a leaked document from J.P. Morgan, over a year ago, J.P. Morgan was saying that any dramatic increase in food prices or in energy would cause social and political and economic, unrest and chaos and it named the countries where all this stuff is going down first. It named Egypt and Tunisia and Algeria. So, basically, you're seeing a lot of the things play out. It looks like this is a policy that Wall Street wants, and they've predicted that the things are going to be happening.
That's very interesting, and I wonder how they came up with those conclusions. One of the ways that people could hedge themselves against rising food price is buying companies that create fertilizers for the farmers, like potash. Is that correct?
Yes, definitely. I actually just wrote an article on that for Financial Sense about a few days ago. So that was my second full article that was published on Financial Sense. People can go check it out there, or they can listen to more of these podcasts. But I've talked about potash stocks and investing in those, and why I think that's the best way for most investors to invest in those, because you can still take advantage of the food prices, and the margins I think are going to be safer because they're at the lower part of the value chain.
And for people that never heard of potash, why don't you explain to them what potash is and what it does?
Okay, well, potash is fertilizer, and there's different types of fertilizer. There's three main types of fertilizers. There's potash, which is really symbol KCl, potassium chloride. And there's also nitrates and phosphates and urea. So those are pretty much like the main types of fertilizers, and they're used in different combinations depending upon like the geographic area of the soil and other stuff like that. But that's the main things that people need to know about the actual makeup of the fertilizers. And then those fertilizers, after they're mined, after the potash or nitrogen or phosphates are mined, they are then mixed with, industrial chemicals, normally some sort of amount of natural gas, and some other chemicals are put into there, and that helps, increase crop yield. So that is it for most modern agricultural farming, and most of our modern agriculture in like the United States, in China, in Brazil, most modern agriculture is monoculture. So this is not the like organic farming, that we learned about like in school, from like the nursery rhymes and stuff like that. A lot of the world has deviated away, from the old farming, and now it's very, very big business.
I see. And when people are looking for potash companies, what's the first thing they should look at? Should they look at the potash deposits, the geographic location, or should you look at the management first? What are the things you look at first when you analyze potash companies?
Well, I think all the factors you mentioned all play a part in this for sure. But the best thing I could tell people to do is to not put all your money in one potash stock. So there's not really a potash producers ETF yet. So people need to, even if the story sounds good, the management has a good track record, the deposit is in, politically safe jurisdiction, so there's not a humongous amount of geopolitical risk. Even if the fundamental factors like that for a potash stock are great, people still need to diversify. And that's what I think most people don't understand. People, I still talk to people who you and me have done consulting classes with, or friends that we told about investing in these stocks, and they mention the word all in or something for a position or something like that. And I don't think that's a good word that a smart, investor who calculates out risk reward should be using. They need to learn to stay diversified. They need to maybe keep some money, on the sidelines there in case of a pullback, or buy their positions, in halves or thirds or whatever. But, like the words all in and investing are not a good idea, Mo.
Oh, I agree. I don't think people should put all their eggs in one basket, especially when it comes to commodity, when it's extremely volatile, and it's hard to pick out winning stock in commodities, because a lot of them dilute their shareholders, or they just go bankrupt because they don't have enough capital. For potash, a lot of the potash companies are in Africa, and there's some in the Middle East. I'm not sure if there's any in Canada or Mexico, but I know one of my favorite potash company, which is Allana Potash, which is based out of Ethiopia, which is not in production yet, but they will be, I believe, in a year or so. Is that correct?
Yeah, Mo. Allana is planning to go into production, around 2013. So, there was recently an interview on a BNN from the CEO, where the CEO went on and talked. And for people who are not familiar with Allana Potash, this was a 30-cent stock that I started telling people about 6, 7, 8 months ago. And now it's, over $2. So this, I found a gross mispricing in the market for Allana Potash. I liked how the Chinese had already invested in the company. I liked a lot of the other reasons that people were investing in the company for, like, they had a good amount of institutional ownership. The Ethiopian government was investing in, key infrastructure around the project. And also they're going to be a low-cost producer because they don't need to drill down, there is a lot of potash in Canada, Mo, because that's where, Potash Corporation is located. So Canada has a humongous potash resource there besides just the assets that Potash Corporation owns, but a lot of that potash mo is like very, very deep in the Earth's crust. So it's over 1,000 meters deep, I believe. And the Allana Potash deposit in Ethiopia is actually very close to the surface, and it's surprisingly high grade. So this deposit, and it's close to China and India. It's closer to China and India than the other deposits. So this is a good company. With that being said, I still think the stock is undervalued, especially if they go into production and are not bought out. But it's just not grossly undervalued. Extreme mispricing like it was before when I originally found the stock. So there's a lot of other good potash juniors, Mo. But the key, like you said, for anyone who's not too familiar with the junior resource industry, is that if the project is planning to go into production, will management be able to balance growth and dilution? So will they be able to build out the resource without diluting the shareholders massively, giving away millions and millions of warrants to hedge funds and institutions and the bankers who are funding them? Will they be able to balance growing and getting into production, or getting the project past all the different stages to where a bigger guy like Mosaic, who's the second in command basically of the potash sector, who's second behind Potash Corporation, where Mosaic might be willing to, or someone else, or Intrepid Potash or Agrium might be willing to buy the project. So this is something that investors need to learn as their due diligence. Unfortunately, right now, there's just not a potash producers ETF for people who don't want to go in there and pick out the company. And there is like a food ETF, but it's like a mix of other, types of stocks like John Deere and Monsanto. That's MOO. So it's not a good pure play for higher potash prices, and you're not gonna get the oomph that you did with Allana Potash. How we the people who have invested in Allana Potash, when I start talking about it around under 30 cents a share, or around 30 cents a share, how it's been up over 200% so far in just a short amount of time, and I think it's going a lot higher.
Very good, very good. And let's go on to the next subject, which is gold and silver. This past month has gotten pretty interesting for the price action for gold and silver. If people read my technical analysis for gold a month ago, I predicted that it will bounce off the 20-day exponential moving average and then go up, which is what actually happened. So anybody out there that does the chart for gold, I believe that if you use the 20 or the 30-day moving average as the support line, you could be able to make buy and sell your positions off that line pretty well. For silver, the chart looks pretty interesting, and it's in position to make another move. It's actually in the process of making a cup with a handle. Now they do need to fill the gap around the 2940, 2950 area before making another uptrend. To, I believe, will be $35. So Jason, what's your thoughts about gold and silver for the past couple months? There's been a lot of talk about silver backwardation and the supply shortage for 100-ounce bars from various bullion dealers.
Well, I think there are legitimate supply shortages, but you're not seeing it, come across on every single, investor product at the retail level. Like, at some places there'll be out of 100-ounce bars, and they'll be on humongous back order, or the Eagles, will be readily available. So, but we are starting to see in general, though, across the board, even if there's silver in stock mode, we are starting to see premiums go higher. You're seeing a lot higher premiums from the U.S. Mint, and you're starting to see those premiums also being passed on to the bullion dealers. So the premiums are going higher as the refiners are struggling, to keep up with the demand. In general, though, we already did our 2011 market forecast, and we said, or at least I said, that silver would close 2011 somewhere between $40 and $45 an ounce, and I'm going to stick to that still. But I think your short-term price target of around $35 is fairly accurate. I think when silver does make its move here, and I did notice the cup with the handle chart beginning. I saw the cup clear. The cup is clear. The handle, like, I'm not sure if the volume has dropped enough yet to fill that void, like you said, and create the handle part of the cup with the handle. But that would signal an imminent breakout. And normally, like from the technical traders, what they tell me is normally you would expect as a price target a Fibonacci move up. So that would put us from 30. A Fibonacci move up would be about 32%. That would be one Fibonacci move up. That would put us around 36 or so.
That's interesting. And for the gold chart, I mean, gold lagged for the last month of 2010. It didn't go up like silver did. So I believe it had a little bit more catching up to do. Now that it's bounced off the 20-day moving average, I expect it to hit the $1,500 mark within the next few months. I wouldn't be surprised if it happens in March. It has a lot of catching up to do. I think for the next couple of months going forward, it's going to be interesting to see what Ben Bernanke has in plan for after June when QE2 expires. That could greatly affect the price of gold and silver. Do you agree?
Yes, but I also think that I don't see any decrease in demand for physical supply coming out of China either, because remember, China's still on the dollar peg. So as long as China's going to continue to print when we're monetizing debt and printing money, I think it's gold and silver are going to, start rising. They've been lagging, so far. The move up in $30 back to $30 from the 26, 27 levels in silver. Most people have not noticed it yet, unless you're completely paying attention to the sector every day like we are. So I think as silver starts to break that $30 resistance mark and clearly goes to 31, 32, etc. I think it's gonna push, the hot money's gonna come back into the sector and just push it higher. As far as stock pick goes, I think as far as undervalued companies still, I think people, as a way to play this, if they haven't bought any gold or silver mining shares yet, I think they should take a look at like a Minefinders, a First Majestic, or a Revit Minerals as a few of the plays. Also maybe a Mag Silver.
Oh, I agree. The mining companies are still way undervalued. Not even close to their true value yet. Companies like First Majestic have plenty of upside to go. Even Silver Wheaton has a lot of upside to go, despite being at $35 right now. I believe that stock, at the end of the day, will at least be in the triple digits. That's my guess, but don't take my word for it. Regardless, we don't look at the day-to-day price action. It doesn't bother us that much because we look at the big picture, and the big picture is that as long as the Federal Reserve continue to print money, there will be demand for gold and silver, and it will continue to go higher, no matter what. Do you have, for the next couple months going forward, is there anything that our listeners should keep their eye on that might be worth noticing?
As far as the macro trends, Mo?
Yes.
Okay, well, I would look, like I said, like you already mentioned, for QE3 announcements. I mean, they might not even disclose this to the public, or it might not even be called QE3 at this point because there's such negative connotation now with it. They could change the name, but it's probably going to be the same thing. Who else is buying the 30-year U.S. Treasury? So the Fed needs to step in as the buyer of last resort for the 30-year Treasury, because otherwise it'll spike interest rates, and they're going to be worried about that. But I mean, interest rates are going to spike anyway. So in general, though, what people need to pay attention to, besides the end of QE2 and QE3, what they need to pay attention to is sovereign debt defaults. Will Portugal or Italy or Spain or any of these other countries that are in the euro that maybe there's one that everyone's missed that'll default. So maybe one of those. I know there's a lot of problems in Ireland. I hear Ireland's even worse than Iceland now. And there's not a lot of reliable news coming out of Ireland either, unfortunately. That's something the people need to pay attention to. It should force gold and silver prices higher, but if it doesn't, then I would definitely be buying those dips if I have cash. If there was a scare and people retreated to dollar and silver were to drop back down to 25, it would be a great buying opportunity. So I think that's one thing. I think people need to pay attention and look at the states, at the U.S. states here, because I've heard those called, the hogs instead of the pigs. But there's a lot of states, Mo, that are in worse, financial shape than the European countries are. You look at California, Illinois, New York, New Jersey, and a few of these other states. Florida can Florida can create a state income tax, so they might not be in as bad a shape from a point that they could actually raise taxes. But, Florida is in bad shape too. So that's at least like 5 or 6 states, and there's more than that. And then, that's just at the state level. That's not even counting, counties and municipalities and cities and stuff. So this is something that Meredith Whitney talked about a while ago. She took a lot of heat for. I think she's right. I think, though, the Fed's going to have to bail them out. I think what's going to happen is that, the federal government here has everyone, at the state level and at the smaller locality level still addicted to, free money, not having to make as many tough choices. Although, did you see that news story out of Camden, New Jersey, where 50% of the police were fired? That is truly tragic.
I did hear about that, and that's not good for that town, because that town, I believe, has the highest crime rate in the country.
Yes, but these are the type of tough choices that you're going to be seeing. Unfortunately, I think that's not going to be a outlier. I think that's going to be, something that's going to be happening across the board, because we weren't efficient, with using our money and spending our money, and a lot of it was wasted. I don't know, it went on bad pork projects, or it went to too high government employee salaries or what, but there's a lot of waste in there, and it needs to be trimmed back. And unfortunately, like a business, to survive, these guys are going to have to cut, more than people would be comfortable with. And they're going to have to do that, and people, businesses, governments, everyone's unfortunately going to have to probably learn to live below their means for a while. I believe we are in a depression here. I don't think this is a recession. And, people are going to have to learn to do more with less.
I agree, and that's going to be a hard transition, because basically people want stuff now. They don't want to wait for it. They buy it on credit, and I think those days are coming to an end. This one thing to note, that the Federal Reserve is the biggest holder of the Treasury, government Treasury bonds and bills. They're first, and then China second, and then Japan third. By the end of June, when QE2 expires, the Federal Reserve will have more holding than China and Japan combined. So that's how big their holding is. And I believe it will continue beyond June. Otherwise, the country will be in big trouble. Well, that's pretty much a wrap-up of Wall Street from Main Street podcast for February edition. Jason, why don't you tell people about what you do and how they can find more information about you?
Well, they can visit me at my website, my blog website at jasonburak.com. Or they can look at some of the articles that I've had published on Financial Sense website. I will be writing more for them. And also the Daily Commodities and the Daily Gold. And before we go, Mo, I'd like to throw in some additional company names for some people to take a look at in the potash sector. Just because,
Yes.
we don't want to just talk about Allana Potash here, although I really do like the company a lot. As far as other juniors go, Mo, I think people should take a look at also Intercontinental Potash. That is TSXV on the Venture Exchange. Symbol I is in Israel, C is in China, P is in Portugal. Western Potash, which has over a 40-year potash mine life, and their mine is in Canada there. In the Athabasca Basin, and that is a TSXV and their symbol is W as in Willie, P as in Portugal, X as in Xavier. And the last one is a potash mining company down in Brazil that is pretty unique. It's not a normal conventional potash miner. They're trying out some sort of new unconventional mix, and the Brazilians actually seem very interested in this, and that one is Amazon Mining. So that would be probably my top list of 4 potash juniors right now, excluding Allana.
Now, you wrote a rare earth report as well. How can people buy a copy of that report?
People can go to kertrading.com/dragonmetals, and we also have a rare earths webinar that is supposed to be confirmed. If I can confirm the guest tomorrow or the next day, and we're supposed to have that confirmed and have that next Sunday night. So if everything goes well, Kevin Kerr is still traveling. I believe he just got back into Estonia, probably in the last few hours. So if we don't have the webinar next Sunday, I mean, I don't want people to get upset. We do want to do the webinar, but, you know, we want Kevin Kerr on the webinar, and we want the right guests. So I don't want it to just be, you know, me and a couple hundred people angry with me on a webinar there that we didn't have the guests. So we're going to make sure that, you know, all the guests are booked. It fits in everyone's schedule. One of the guests is supposed to be the managing editor for the Rare Metal blog. His name's Jeff Sanford, and I think we have a couple other guests too. I think including the mercenary geologist Mickey Fulp. So people should pay attention for that. Like I said, we're trying to have the exact day, like I said, for next Sunday, which is the 20th. Working on the time, and hopefully I will get the word out this week to everyone about, you know, the concrete details. But if not, don't get discouraged. And the Rarest webinar, you know, will provide things outside the Dragon Metals, and if people, you know, want like better information, they can go and buy the Dragon Metals report, and if they want gold and silver information mode, they can go and buy your and Chris's treasure hunting report, which, you know, just is now being sold, you know, through David Morgan also.
That is correct. This David Morgan endorsed our report just before this weekend, and he is now selling it on his newsletter. If people want to buy a copy of our report, Treasury Hunting for Precious Metal Stock, they can go to my blog, momoneyblog.com/silver gold report. We just added a enhanced valuation table that is updated in real time, and we also updated the report with more information and a bonus material on silver backwardation and other topics. We are selling that report for $75, which is reasonable price compared to other people that are selling the report for thousands of dollars. So be sure to go to my blog and to Kevin Kerr website and get a copy of our report.
Now, Mo, the $75 report is for the sophisticated investor who wants to learn to master the gold and silver section. But if you're just, you know, like a college student and you want to learn to get started, and you just, you know, you don't want to pay $75, do you guys also still have the $32 the beginners version with the one MSXL table evaluation thing for sale?
Yes, we are still in the process of trying to set that up. That will be a beginner package for our younger audience. It will include our first version of the report and the Excel spreadsheet of the evaluation table. But it's not updated in real time, but it's still a very good tool to use to value companies, whether they're overvalued or undervalued. We're working on creating that on my landing page, and hopefully it will be up this week, I believe.
Yeah, I think the $32 version is a really good, you know, beginner's guide for people who just want to get started with the sector here. If they really want to master it, though, if they're planning on putting like a large amount of capital into the sector, I think they should go for, you know, the more sophisticated package. So you have, you know, both packages there to meet different people's needs. I think that's really great.
Yes, we do. And again, we'll have that set up this week. Well, that'll be it for today. Until next time. Good luck and good night. And Jason, thank you for coming on board to speak with us on Wall Street for Main Street podcast.
Thank you very much, Mo, and we'll be back shortly. If you don't hear from us in another podcast before the Rare Earths webinar, please definitely log on to the Rare Earths webinar and start to learn some stuff about the rare earth sector if you're not already invested in it. I think a lot of Wall Street is wrong about the rare earth sector. I think their information is bad. They have the facts wrong, and I think you'll find that out on the webinar. Okay, bye, everyone.
Very good.